Since Donald Trump was re-elected as US president, the media has been focusing on how American trade policy is likely to change. One of the most talked about changes is Trump's promise to put tariffs on all imports, with a focus on Chinese goods. This is likely to make an already tense trade relationship even worse, but the specifics of the Trump administration's plans have not been made public yet. It's important to note the steady drop in US-China trade over the past few years, a trend that has hurt American companies that depend on Chinese markets the most. As part of Beijing's larger plan to broaden its sources and become less dependent on US goods, China has cut back on importing the latter by a large amount. This has had a negative impact on a number of important US industries over the past 3 years. Based on our research, 3 areas are most affected by China's lower imports from the US. We'll go over these in more detail in this video. Before going over the 3 areas where China's lower purchases from the US have had the most impact. First, let's look at the history of the relationship between China and the US up to the last few years. The US-China relationship has changed a lot over the last 200 years, going through times of cooperation, competition, and war. This detailed history looks at how we got to where we are now. Relations with China centered on global events and business dealings. The first American merchant ship, the Empress of China, arrived in Canton, Guangzhou in 1784. This was the start of direct trade between the US and China. During the 19th century, trade grew as American merchants exported goods like Jianang and imported Chinese tea, silk, and porcelain. However, geopolitical tensions rose during the Opium Wars, 1839 to 1860, in which Western powers, including the US, tried to open Chinese markets through unfair treaties. In 1844, the Treaty of Fungia made the US a most favored nation, which allowed for more trade and missionary work. During World War II, the US sided with the Republic of China against Japanese invasion, giving it military and economic support after Japan was defeated. China got into a civil war between the Communists and the Nationalists. The People's Republic of China, PRC, was formed after the Communist win in 1949. This caused the US to cut formal links with China and accept the nationalist government in Taiwan as the real government of China. The Cold War and being alone from 1949 to 1971. In the early decades of the Cold War, both sides were suspicious of and hostile toward each other. The US used containment policies, such as trade embargoes and political isolation, against the People's Republic of China because it saw it as a communist enemy working with the Soviet Union. From 1950 to 1953, China fought in the Korean War against US-led troops, which made ties even worse. From 1971 to 1979, things got better. In the early 1970s, there was a big change. President Richard Nixon's famous trip to China in 1972, which came after secret talks between Nixon and Kissinger, led to the Shanghai Communique, in which both countries agreed to work toward improving their ties. In the end, full official ties were set up on January 1, 1979, under President Jimmy Carter. The United States also recognized the People's Republic of China as the only valid government of China using the One China strategy. From the 1980s to the 2000s, trade and business activity grew. During the 1980s and 1990s, business ties grew. Under Deng Xiaoping, China's market reforms attracted US businesses, which led to big investments in trade growth in 2001. China's membership in the World Trade Organization was a big deal because it made the country part of the global economy and greatly increased trade between the two countries by 2006. The US's second largest trading partner was now China. This led to strategic competition and trade conflicts. 2010s-2020s, the last 10 years have seen a change toward strategic competition. The US is worried about China's trade practices, intellectual property problems, and aggression in the region. Even though there was a Phase 1 trade deal in January 2020, the trade war that started in 2018 under President Donald Trump caused taxes on billions of dollars worth of goods. Tensions stayed high because of international disagreements and different approaches to global problems. Now, let's look at how trade between the US and China has changed over the years. Looking at how the amount of trade has changed over the past few years, though there have been big changes in trade between the US and China from 2021 to 2024, the two countries are still very important business partners. In recent years, there has been a slow drop in trade volume due to changes in the economy and higher global issues. By 2023, trade numbers had started to drop as economic and political problems got worse. The amount of goods the US sent to China dropped by 4.3% to $144.95. Its supply sources, especially in areas like semiconductors and agricultural products. As of November 2024, detailed trade volume data for the whole year has not been released yet, but early signs suggest that the trend of falling US exports to China has continued, which is in line with China's plan to cut back on imports. Depend on us trade between the US and China has decreased even more because of imports, especially in areas like technology and energy. US exporters also face tough conditions because of higher tariffs and changing economic policies. In recent years, China has cut its imports from the US by a large amount in 3 key areas. Let's take a moment to ask for your help. Please click the like button if you like what we post to help us even more. Leave your thoughts and feedback in the comments. Your participation helps us grow. Thank you. Agricultural products. In the past few years, China has cut back on importing US agricultural products, especially corn and soybeans, as part of an effort to increase food security and diversify its supply sources. In the past, the US was China's main supplier of soybeans. However, since 2018, China's imports of US soybeans have dropped sharply. By 2024, the US would only account for 18% of China's soybean imports, down from 40% in 2016. During the same time period, Brazil's share rose to 76%, making it China's main supplier. This change is due to a number of important causes. First, the US tariffs on US soybeans caused the trade war with China, which made China look for other sources of food. Also, the prices of Brazilian soybeans have been more affordable, which makes them a better choice for Chinese buyers. In addition to these short-term economic benefits, China has also tried to become less dependent on any one provider to lower the risks of global strife. This is part of a larger plan to spread out its suppliers and sources. China's trade trends for corn have also changed a lot in 2023. After China approved Brazilian corn imports in 2022, Brazil became China's top corn supplier. By mid-2024, Brazil supplied about 71% of China's corn imports, further reducing the US's share of this market. This change in corn sourcing is due to China's focus on diversifying import sources to ensure stable agricultural supply chains and its goal to reduce reliance on foreign sources by increasing corn production at home. China is looking for new sources because of its ongoing trade disagreements with the US. These changes in China's trade habits are part of a larger plan to make food security better. To lower its exposure to outside forces and keep agriculture supply chains stable, China has taken big steps in recent years to import fewer semiconductors from the US. This is because it wants to lower the risks that come from trade disputes and export restrictions. This strategic shift is clear from the sharp drop in semiconductor imports and the large investments China has made in its own semiconductor industry while also expanding its supply sources. In 2022, China imported 538.org graded circuits, which is 15.3% less than the previous year. The total value of these imports was 415.6 billion yuan, which is a 3.9% drop from the previous year. This downward integrated circuit imports fell even more in 2023, with a 15% drop in the first 9 months, equal to 379.8 billion pieces. These numbers show that China is putting more effort into becoming less reliant on foreign electronics. This is especially important as problems in the global supply chain get worse and there are political demands to fix this problem. China has put a lot more money into its semiconductor industry. Just in 2023, more than 350 new semiconductor projects were started, including important ones in third-generation semiconductor memory. Chips for cars. New technologies for sensors and packing. The Chinese government has promised an extra $48 billion for chip research and development facilities and workforce development through 2024, so the growth will continue. This investment shows that China is determined to build a strong chip business in China that can meet its own technology needs. As part of its plan, China is also expanding its chip supply chain by buying more from countries other than the US, like Taiwan. In the meantime, South Korea and Japan have made big strides, as have local companies like the Semiconductor Manufacturing International Corporation, SMIC. Recently, SMIC, for example, made 7-nanometer chips. This is a big step forward that makes China less dependent on foreign technology and shows how far the country has come in improving its semiconductor skills. China wants to become more independent in the semiconductor industry so that it can withstand economic pressures from other countries and become a major player in global technology. These changes, along with China's strategic investments and lower prices, will have a big impact on global semiconductor supply chains. Imports that show it wants to improve its economic and technology freedom. In recent years, China has carefully spread out its sources of liquefied natural gas, LNG, making it less dependent on energy exports from the US and increasing its energy security by signing long-term deals with several international providers. History shows that the US became a major supplier of LNG to China after China lowered tariffs on US LNG imports from 25% to 10% in 2019. At first, this led to a surge in imports from the US, which peaked in 2021. However, by 2023, China started looking for other suppliers to lower its exposure to the US market due to rising geopolitical tensions and trade disputes. China bought less LNG from the US, and the US now makes up a smaller part of China's total LNG supplies. China bought more and more from sources like Australia, Qatar and Russia to meet its energy needs in 2021. For example, China's biggest LNG source was Australia, which sent 40% of all LNG imports to the country. China is trying to build a stronger and more self-sufficient energy supply chain to ensure a safe energy future. This diversity fits with their plans. China has signed a number of long-term LNG contracts that show its dedication to steady supply from a number of places. Total Energies in China's COPC signed a deal in November 2024 to provide 2 million tons of LNG every year for 15 years, starting in 2028. Petrochina also predicted that China would import between 78 and 80 million metric tons of LNG in 2024, thanks to strong demand in both industry and commerce. We producers may face problems because China is buying fewer LNG phones from the US. Some experts are worried that future policy changes, like higher taxes or China's efforts to diversify its economy, could make things even harder for us. An important source of income for the American energy sector has been affected by China's decision to cut back on imports from the US. This has had a big effect on several areas of the American economy, such as energy, technology, agriculture, and semiconductors, which have caused China to buy more soybeans, corn, and LNG from other countries. China has changed the kinds of trade ties it has and dependence on our goods. This change has not only hurt US market share, but it has also put American businesses that used to depend a lot on Chinese demand in a tough spot, since the Trump administration might put taxes on all Chinese imports. How hard the economy is on us businesses that are already under a lot of stress from falling trade numbers could feel even more so. This could make things even harder for an economy that is already having a hard time. There is a lot of competition and politics around the world. That's all for this video. Thank you so much for watching. If our content spoke to you or inspired you, please show your support by liking it and following to stay in touch with our community.